my perception is it has definitely changed, but hasn't changed as much as it has in other economies. So 6-9 months ago, really there was nobody out there looking to lend in the secondary market. You've got a couple of banks beginning to look in that sector, setting up offices or dedicating somebody from London to cover the Dutch market. But it's still incredibly thin in terms of the banks. As highlighted in one of the presentations, what called the debt funds, they're definitely in the market, but very, very expensive. You're looking at whole loan returns of 8%, so it's very, very expensive. But there is some big money out there. Procoa has hundreds of millions just focused on the Dutch market. They're not going to find it very easy to compete on the prime properties because that's where the banks are. So therefore, they are going to focus very much in the secondary market, and those numbers are very, very big. Or the amount of money they've got focused in the sector is very large compared to the transactional volume. So it is going to have a big impact, and there is a little bit of competitive tension. I think a number of those debt funds are going to have to look very carefully at their returns because they're just simply not going to write any business on the way that they've raised the capital.
I agree on the vision of Michael. Achmea has 2 debt funds of our own. One is focused on the, it sounds like a commercial talk, but one is focused on the residential market, so it offers loans to individual people, and that's another kind of debt. It's really performing really well. But when I look at commercial loans, it's a tough market because we have, I think we had 4 companies who were active in the debt market, and in fact they all gone away, and maybe one of them is getting back, but at volumes only 1/10 of what they used to supply. And also when we look at our own debt fund, we're really not that active. We can offer maybe 100 to 150 million but on a really high high yields, high spreads. And I won't think it's likely to change. It's likely to change step by step, just like our economy, but it will not grow very, very fast. So debt will be an issue the next few years in the Netherlands.
Well, for Bouwinvest it's an easy answer. We don't use any debt in the Dutch sector funds, so there's 0 leverage. So to give you a general answer on that, I pass on that one. But I know that next to the Dutch providers of debt funds, you also see the international providers coming up, also offering those funds to the Dutch market. So, but in our funds we don't do any leverage.
Well, in our situation we have some leverage. I'm responsible for this residential fund, and actually since last year it's quite easily. The banks are not fighting to get a position. But it's getting more and more easy now to get leverage for funds. But it all has to do with, of course, with the quality of the real estate and the forecast, etc. But it increases quite a lot last year. Okay. Mainly, actually, when looking at the Netherlands, mainly also some big foreign banks, German banks, some English, some from Great Britain, some more foreign banks, finances.
This time last week I was presenting at the Loan Markets Association, which is UK typically lenders, and they were talking about how competitive it had become for them to lend both in the senior and mezz space and achieve the IRRs they had maybe set out to achieve when they raised funds, or even for the sort of straightforward clearing banks. It's very much a debtor's market, so to say, and how that was forcing them to look at continental Europe to get the returns that they had previously thought of getting in the UK. And I think, it may be that now the debt funds are coming to the Netherlands with very aggressive pricing, but my suspicion is that supply-demand balance will change very quickly if you look at the sheer number of entrants going in. And this time next year, I suspect it will be a very different picture indeed.